Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy Friday to you guys as we are heading right into the last trading day of the week. And of course, we do know that days like this always comes with their own peculiarity, which of course we will be taking into consideration while we navigate the current financial landscape. So I'm so excited to be with you here this morning as we gradually round off for this week. Well, this week has been a swing of emotions from hopes to uncertainty, and of course a little bit of fear at some point in time. But at a whole, we've not done very bad at all. And of course, the week was laced with a lot of indecisive situations, level of uncertainty, prevailing indecisive situations in the market as market participants were looking forward to the economic features that this week was laced with, from the Bank of Japan's interest rate decisions to the monetary policy insight from the Bank of Japan. And of course, we also had the GDP data from the United States and the initial job claims count. And of course, we also had another one which I'm not sure I can remember right now. So it was laced with a lot of economic features which made market participants not to make aggressive decision. But as we round off, as we get into the last trading day of the week, the tendency for us to have a huge traction today increases. Now, why is this so? Well, first of all, considering today being the last trading day of the week, which always comes with the idea that majority of market participants will want to be rounding up their positions by taking off their money from the chart, and while doing this we may be seeing a situation where price could reverse from the prior leading price action, giving us reversal setups along the line. And we are going to be taking this into consideration too as well while we review the current market structure. So I do encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. Well, so far this week we have been monitoring three financial assets, which includes the USOILSPOT, which of course has done pretty well since the beginning of the week. We also have the USDJPY, which of course struggled after we saw how the yen gained some traction but retraced back into our entry zone due to the resilient US economy. And of course, we also saw the XAUUSD, my favorite asset, which of course we did witness some couple of losses on that asset this week. So it wasn't really a good thing. It was, though, thank goodness for the US all that we were able to make some significant amount of profit on that one to complement the losses and indecisive phase we had on the other particular asset. But let's see what today will bring for us, as I do believe that we are going to be having a huge traction in price action today. And because of this, we want to be looking at when will this happen and how will this happen, so that we can actually be on standby to capitalize on this move. Then for those of you who are joining us for the first time, you're highly welcome on board. Very glad to have you around with us this morning. And to give you a brief of what the Forex Morning Mastery is all about, well, first of all, we usually share a couple of videos during the course of the weekend which gives a detail into what our plans for the new week will be like. So the Forex Morning Mastery is an avenue where we all come together to do follow-ups and reviews of this asset I shared during the weekend, where we as we get prepared for both the London and New York session on a daily basis. So officially it kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC. And I recommend that you stay tuned in so you don't miss out on any of the ideas we will be talking about today. And always take note that my aim here is to equip you with the knowledge and skills necessary to make your own independent trading decisions. Now, trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach, which eventually makes you to be able to use the information gathered in this community to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving straight into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiments today. And of course, you know how we do it. For those of you who have been with me for a while, you know how important this exercise is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint and identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, which of course includes the US dollar and the Japanese yen, we have been focusing on high impactful event from both the United States and the Japanese economic docket. And this week was laced with a lot of features that had served as a catalyst, but due to the indecisive situation that has met the Fed interest rate cut, which was expected to start by the month of March, but with a resilient U.S. economy, considering the data coming in from the S&P Global for this week, which came in beyond all expectations. And of course, we also witnessed the GDP data from yesterday, giving us an expansion of about how many? Okay, I think we have an expansion of, hold on a second, we had an expansion of 3.3%, which was 1.2% higher than the usual expectation, but it was a little bit lower than the previous data, which came in at 4.9%. But the most important thing is that the economy actually expanded, further emphasizing the resilience of the US economy. Then yesterday also we saw the CPI data, which of course we did emphasize that this is an inflationary gauge of the Japanese economy, and of course that one also came in below the previous month, which of course shows us signs of reduced inflationary pressure, as supported by the Bank of Japan governor, that is Ueda, which of course has also made hawkish remarks during the course of the week as regards to their pivot away from their current ultra loose monetary policy as early as the month of March and April, giving further traction in favor of the Japanese yen. Now today, Friday, January 26, we will be looking forward to another high impactful event from the United States, which of course is also an inflationary gauge of the economy, and that is the core PCE. That's the hold on a second, please. So the personal consumption expenditure, which is the sorry, not this one right here, which is the major one we are looking for, and is usually released on a monthly basis, and of course it measures the changes in the prices of goods and services purchased by consumers in the United States. You see, this data here is usually considered to be um, one of the indexes that the Federal Reserve usually look forward to, and in fact it's always also considered as the preferred gauge of inflation for the Federal Reserve. And definitely they will be looking forward to what this data will be today to give us an insight into what the timing of the Fed rate cut is going to happen. So generally, a high reading is usually seen as positive for the United States economy, giving us a bullish signal in favor of the US dollar, while a low reading is considered as negative. So for today, this is the major one majority in the market will be looking forward to. And from the previous data we have here, we have a 0.1%, that is for the month of November, and we have consensus projecting 0.2% for the month of December, which will be coming up today. So we shall look forward to see what the actual data will be. But one thing I can tell from what the consensus figure is saying here is that it appears that the inflation is still sticky in the United States. So let's see what will happen. Will it be below the figure we have here, beyond it, or just come in as expected? And of course, one thing we do know here as technical traders is that the anticipation of such events usually affect the market sentiment, which definitely will reflect on the chart as price action. So what we will be doing is to go through the chart, sniff through the current market structure to identify and see how we can strategically position ourselves for the next move today. So grab your favorite beverages and let's get to it. So as usual, the first asset we will be taking on, so I intentionally open this down so that it won't cause any form of delay for us today. So the first asset we will be looking at today is going to be the USOILSPOT as usual. And of course, since the beginning of the week, we have been buying this asset, and at no point in time did the market give us any sign of a long-term selling opportunity here, as price action continued to stay afloat above our ascending trend line, which of course has played a major role in guiding our buying opportunities throughout the course of the week. Now, for the sake of those who are not part of our earlier sessions, let's quickly run through how the week began on the USOILSPOT and see what really led to the idea of buying this asset. Now, before I go into the details on that one, I want to reiterate here that for those of you who are joining us for the first time and in any way had missed out on the top-down analysis we did on the USOILSPOT, you want to be checking our previous video so you can have an understanding into how we were able to identify the key levels we said we will be using to guide our decisions for the week, the major structures and patterns we did identify here. If you had missed out, the links are right in the description box of this current video you are watching, so you can check it out after the live session. So let's get back to business here. So at the beginning of the week, it was more of a consolidation phase for the first 10 to 12 hours of the week, as we saw price action initially confined within the $73.35 level and the $72.80 area to emphasize the prevailing uncertainty in the market at that point in time. And of course, whenever we have a range like this in this community, you know how we do it. We exercise patience and wait for price action to either break down the support line to give us an opportunity to sell, or break out of the resistance line to give us an opportunity to buy. And with this understanding in mind, we had our orders placed at both ends with the hopes that price action would trigger any of them to signal the next move for us, though we had price trigger our sell stop order just right below the support line here. But unfortunately, that position did not do very well at all, as we got taken out of that position in a loss. And in fact, with that engulfing candle springing out after being taken out of that sell order, we were looking at a potential uptrend scenario. And thank goodness, our first buy position for the week was triggered, had the breakout of the resistance line, had the $73.35 level, and since that moment we have been buying this particular asset. And if you remember vividly, we had multiple entries like the $73.80 level, we had the $74.50 level, and of course the $75 area, all of which we did capitalize on buying opportunities as soon as price action broke out of that structure. And of course on Tuesday we did move all our stop losses, secure the current buy position before the bearish pressure resumed in the market, taking us out of that position with a minimum of 200 pips in total of the 4 buy positions we capitalized on. So the week started on a positive note for us all in this community. Now on Tuesday we begin to notice the resumption of bearish pressure, as we saw how buyers were finding it difficult to break out of that zone between the $75.40 and of course our key level had a $75 area. Remember how important that key level was. The key level was also serving as the neckline of the reversal pattern we did identify on the daily time frame, and of course it was one of those parameters we were looking for the breakout of to further emphasize that price will further go to the upside. However, we saw certain pressure around this area, giving us a situation that projected a reversal setup in the form of a double top structure. And as a result of this observation, we did mark out our neckline at the $74.50 level, and I did mention that I wouldn't be taking this one, but if you are a counter trend trader or a scalper, you might want to capitalize on the breakdown of the neckline, which in fact did move about 100 pips before the buy pressure resumed, and some counter trend traders did take advantage of this opportunity. However, as things were going during and based on the fundamental factors behind the scenes, we saw a huge drop in the US stockpile, which was a sign that there is an increase in demand, and whenever there is an increase in demand, we know what happens. Price always rises. Then we also had some other factors too, like the attack on the oil refinery in the Russian territory by the Ukrainian military, which also disrupted oil supply. We also had weather conditions too as well, which affected oil production. And then we also had the geopolitical tensions in the Middle East as well, which has also heightened the concerns as regards to oil disruption in the global market. And all of these factors actually supported the idea of considering buying this asset. And in conjunction with our technical structures on the chart, identifying an ascending trend line and this descending trend line on Wednesday, we did said here that if price will break out of both the $74.50 level and the descending trend line, we will be looking out for opportunities to buy this asset. And we did bought this asset. Of course, we had multiple entries as well. The $75 area was finally broken out for the third time for this week. We also had the breakout of the $75.40 level, and during yesterday's session I did updated us on my trading view and Telegram platform that we do want to be adding more buy position. Had the breakout of the $75.80, and price action continues to climb new highs, as you will see right here. So it has been a tremendously positive week for us all on the USOILSPOT, and for those of us who did capitalize on this opportunity, congratulations and kudos to you for being on standby. Now, as it is right now, if you still have a buy position at this juncture, I hope you've moved your stop losses accordingly. I did mention this in my commentary this morning that it is appropriate that we move our stop losses accordingly. And today being the last trading day of the week, we might likely see some profit-taking activities happen. Secondly, we look forward to the core PCE, which is considered to be the preferred inflationary gauge for the Federal Reserve policymakers, which they will be looking forward to today to decide the better timing for interest rate cuts for this year. So with all of these factors in place, it's appropriate that we secure all the current buy position right now. And if you would ask me, I suggest that anywhere above the 676 or around the $76.30 level, which happens to be our last trigger, let's move our stop losses to this area and secure this position. And always remember that we want to be giving enough breathing space for price action to move around while we move our stop losses accordingly. So with a well secured position at this juncture, what is going to be our next line of action for today? What are we going to be doing? What are the chances we have of buying or selling this particular asset? Well, there are various factors behind the scenes which are affecting this asset so far this week and will continue to affect this asset. Yesterday we saw a stall in the bullish momentum. We saw a little bit of stall as market participants digested the effect of the better than expected Q4 annualized GDP data from the United States. But since then, it has gradually gained some traction. And in fact, we saw during the Asian session, we saw how the market attracted some buyers, but it is not that strong at the moment. And I can understand why this is, as majority will be looking forward to the core PCE today to give fresh impetus into this market. Then besides this, I think that the speculation surrounding the People's Bank of China potentially considering a medium-term lending facility rate cut has also contributed to the hope in this market giving some momentum as well at this point. Then we also heard about the announcement by the People's Bank of China's governor as regards to a 50 basis point reduction in the required reserve ratio, which is set to start on the 5th of February of this year. Now, for those of us who do not really understand what the reduction in RRR means actually, well, the reduction in the required reserve ratio simply puts that it implies that banks are required to hold less money in their reserve. Usually, the bank have a certain percentage of their portfolio held in reserve, which is supposed to serve as a cushion or as a mitigation against risk. And this, of course, all country has their central bank impose this percentage on all the banks in their jurisdiction. However, in this case scenario, the People's Bank of China is saying that, okay, they are going to reduce what you can hold. So what this simply means is that there is going to be more liquidity in the market, so banks can have enough money to give out credit facilities to their customers and, of course, allow buoyancy in the economy. And this is a very, very good way to increase liquidity in an economy. And for this note, market participants are very hopeful that the economy will recover gradually. And when China's economy recovers, of course, China being the highest importer of oil in the world, if the economy is doing well, it is expected that they would want to demand for more oil, hereby increasing the appeal for this asset, of course, hereby increasing the price too as well. So that is another thing. Then another thing that the governor said was the injection of 1 trillion Chinese yuan into the economy too as well. Another very good news for buyers in this particular market. So everything is supporting the idea of continuing buying this asset going forward. Then another thing we've been talking about is the geopolitical tensions in the Middle East, which of course has also been playing a major role in supporting oil prices, contributing to their upward trajectory as well. Now, furthermore, during the course of the week, we also heard about the decrease in the U.S. crude oil stockpile, as reported by the Energy Information Administration, EIA, which of course also boosted oil prices. Then the attack on the Yemen-supported Houthis too also is supporting the oil prices. So everything for me is supporting an ascent in oil prices, and in that regard we want to continue to look out for patterns and structures that will help us position ourselves strategically to continue buying this particular asset. Now, if we look at things from a technical standpoint, especially on this 1 hour time frame, remember that we had this ascending trend line projected after capturing all the pivot lows since last week Wednesday, and in fact throughout the course of this week this ascending trend line was never broken to the downside, further emphasizing the strength of the buyers in this market. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we always want to look out for patterns and structures that support the idea of buying this asset. Now, as it is right now, the momentum is still looking very strong, well, despite the retracement we saw here. Then there is another trend line I would like to project here. If you look at this structure closely, you will see that since the last time price tested the ascending trend line we identified earlier, there has been a deviation, an increase in inclination of the ascending trend line. So if we do this correctly with our line chart on, we have a newly identified trend line right here that we will be using to serve as a platform for an uptrend continuation. So if we bring back our candle chart and do a little bit of adjustment so that it can capture all the pivot lows, we have something like this. So let me zoom right into the current structure. As you will see right now, price action in the last 3 to 4 hours has been oscillating just right around that ascending trend line. So the question going into today's trading session is, will this ascending trend line hold the buy pressure to push price to find new highs? And that makes this area also an important level to look out for today. So I would like to mark out this level. That's the $76.60 area. So I would like to give it a different color here to emphasize its importance for today's trading session. So I will just give it a wine color, and then I do encourage you to label it as well, as we will be needing it to guide our trading decisions for today. So we have the $76.60 level marked out. So as long as price remains above this structure, we'll continue to look out for buying opportunities. Now we have a buy stop order above the $77.40 area, which we will be using to maximize the potential of this bullish move. And in fact, if price action, okay, let's do it like this. If you've been part of this profitable journey since the beginning of the week, you can afford to risk some of the profit you had made. So you can place a buy stop order above this level here. Sorry, I wanted to duplicate this one. So we can place a buy stop order above the 70. Should we make it 77? I think we should make it 77 because of the psychological nature of that price. So we $77 area. So we want to be having a buy stop order above that structure. This is only for those who have been profitable so far this week. So we can afford to risk some of the profit we've made so far to see if price will continue to the upside. And if it continues further up, breaking out the $77.40 level, we will be adding more buy positions to our existing trade. However, in as much as we're looking out for buying opportunities, sellers could still come in. But if sellers come in, that doesn't mean that this market has turned bearish. No, it hasn't. Because if sellers come in at this point, I want to consider it to be some profit taking activities happening here. Now, if sellers come in such a way that it does break down this $76.60 level, which interestingly shares a confluence with that ascending trend line we just spotted here, then we might be seeing a retracement move back into that major ascending trend line that has been supporting our bullish momentum since the beginning of the week. And of course, that's about, let's see how many pips that is. That's about 120 pips they're about to catch. For me, I would not be taking advantage of that opportunity right now because of the strong momentum we have here. But if you are a counter trend trader or you're a scalper willing to capitalize on short-term trading opportunities, you can as well capitalize on that move all the way to the downside, as we have about 120 pips move distance to catch on that one. And please always note that whenever you are taking counter trend opportunities, you always want to be on standby to capitalize, move your stop losses accordingly to ensure that you protect your positions against any sudden pullback. That is if a breakdown of the $76.60 level happens. Now, if price breaks down the $76.60 level and drops further into this ascending trend line here, that is the major ascending trend line, and then this is where I will now position myself to look out for more selling opportunities. That is, if price action goes ahead to break down and retest the structure to the downside. However, if buy pressure resumes around that area and we begin to see something like a reversal pattern, it could come in the form of a double bottom structure, a head and shoulder pattern, or even a falling wedge. All we just need to do is mark out the neckline of that reversal pattern and then buy the breakout retest of the neckline to join an uptrend continuation. So all of this situation I'm explaining here is if price will ever break down the $76.60 level. So let's see how the market is going to play out here, as our center of focus for today's trading activity is basically between that newly identified range between the $77 area and the $76.60 level, where depending on the direction of the breakout will determine where price is likely going to be closing for today's trading session. So I encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decision. So if you have any questions whatsoever as regards to this current setup, or you need some further clarification, feel free to let me know in the comment section below. So with that being said, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. You can also use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page here, and in that regard we shall be moving on to the next asset. I see your comment, Torres Master. Good morning to you. Glad to have you around this morning. It's been a while. Trust you are doing very, very well. Trust you are doing very, very well out there. So with that being said, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. This market has been very, very, very choppy since the beginning of the week. In fact, we really have not gained as much on this particular asset following a tremendously profitable last week on this one. Well, at the beginning of the week, we had price confined within a range, I think, for about 36 to 48 hours of the week, price was more or less ranging between the structure. We had a couple of losses on this one. I think we had one loss at the beginning of the week after price broke out of that resistant line, which of course did not do very well at all. Then we saw price break down the support line here, triggering our sell position as price moved over 75 pips in favor before the bullish traction came in, taking us out of that position. Then we also had a buy position here. That one went into break even, and then we saw price drop down from here, breaking down those ascending trend lines we talked about on our higher time frame. And of course, this triggered a sell stop order for us, and we saw price action move about 100 pips plus before the bullish momentum came in. We had two positions on this breakdown, and then we were able to close out on with a reasonable amount of profit. We've not done really well on this one, maybe around 50 pips thereabout was what we were able to capture here on the USDJPY. And since yesterday we had another sell position triggered, and since price has been struggling around our entry point to further emphasize the level of uncertainty in this market, as you will see here. Though our sell position is still running, and there are still signs that sellers could still push price to the downside from this one. And I do know you will be wondering why this is happening. Why is this so? Well, first of all, we know why we had some positive traction in favor of the yen during the course of the week. We heard about the hawkish comment by the Bank of Japan's governor, Ueda, who mentioned that their plans to drop the inflation rate has been very fruitful, and that as soon as the month of March/April, that it will reduce or get closer to the 2% target, and then they are likely going to be pivoting from their ultra loose monetary policies, which of course has gave some hope to buyers of the Japanese yen. And we saw some traction in that regard, but the resilient US economy is not helping matters at all. And of course, throughout the course of the week, the US economic feature continued to churn out positive and better than expected data, hereby negating the descent of this asset at this point in time. Now, as it is right now, participants are looking forward to the US personal consumption expenditure price index later today to give an insight into when the Federal Reserve will start cutting interest rate, subsequently influencing the US dollar price dynamics and providing fresh directional impetus to this particular asset. So as it is right now, there's nothing much to say here, only for us just to rely on our technical structures to guide our trading decisions going forward. So as it is right now, we still have our sell position running, though it's in a loss of about, let me see, how many pips loss, about 5 pips loss at this point. So let's see how the market is going to play out here. Will the bearish momentum continue? And if it does continue, we have multiple levels to maximize this below the 147.100, and of course below the 146.650, which happens to be the lowest point for this week, to welcome more selling opportunities. And in fact, I also have a temporary trend line here, which I will need price to break down to give me a sign that sellers may still have a say in this market. And in fact, if we can see a breakdown of this one, I may want to be adding more sell position, maybe at a retest of structure to the downside. But if anything new comes up, definitely I will be giving you an update on both my TradingView and Telegram platform. So on this one, we have a sell position running. We still keep a bearish bias, considering the hopeful nature, the hawkish comment by the Bank of Japan governor during the course of the week as regards to pivoting from their current ultra loose monetary policies. However, if things continue to become rosy for the US economic docket and price continues to find buy pressure, well, the only condition that would make me want to be buying this asset is for price to break out of that range we identified at the beginning of the week between the 148.300 and the 147.750. So I would like to see price take out this resistance line. So I have a buy stop order above the structure to capitalize on an uptrend move. And if price continues to find new highs, we have levels like the 148.800 to add more buy positions to our existing trade. So that is what we will be looking out for to buy this asset. And unless this happens, we maintain a bearish bias on this particular asset. So let's see how the market will react to this 147.750 prior to the core PC or during or even after that event. So mark out those levels accordingly, as we will be using them to guide our decisions for today's trading session. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the final asset on our watch list for today. Alright guys, in the absence of no questions, I kindly support the project. Please click on the like button. I'm only seeing 4 likes here out of 10 people on board. Please click on the like button. This is the only way you can, the only and of course the cheapest way you can support this channel and help this community to grow. And thank you very much as you do so. So with that being said here, let's dive right into the next asset since there are no questions on board. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. So on the XAUUSD this week, unfortunately, we are on the negative side of our portfolio, as we personally on my own end, we really have not done very well on this particular asset. This asset has been very choppy since the beginning of the week, and the indecisive phase in this market has contributed to the character of price action so far. We had some couple of losses during the Wednesday's trading session, I think, and we also had some sell positions after price broke down this ascending trend line. That was on Wednesday, and then we had another sell below the $2019.50 level. And since Wednesday's trading session, we have seen how price action has remained above the 2011 and the $2013 area, giving us a temporary demand zone, as we did say here yesterday. And of course, we did mention that as long as price remains above the structure, we shall continue to look out for patterns and structures that supports the idea of buying this asset, and that the only condition that will make us sell is for price to break down and retest the structure, giving us a good signal that buyers at that point will have lost the momentum to continue that uptrend. And we have not seen anything like that in the last 24 to 48 hours in this market, but instead price action had continued to maintain that bullish traction above that temporary demand zone. And since yesterday we had our buy stop order triggered here, since that moment price has been trading above that structure, spent most of yesterday's New York session within the losing territory, and during the later part and stroke the Asian session we saw price climb back up again, and currently we have a profit of about 20 pips approximately, which is not still something tangible at this point in time. So we will have no other choice than to exercise patience and continue to wait for this traction to continue, and if price will go against us, we wait for significant confirmation before we jump into the sell position. And of course we all know why this whole situation is happening at this point. We talked about the current geopolitical tensions going on in the Middle East, which of course has ripple a level of uncertainty across the global economic outlook, and also we have the delayed federal rate cuts, which may have limited the potential gains in favor of safe haven assets such as the gold. And as a result of all of this, market participant will want to look forward to one more event today, which is the core PCE data, to give a fresh impetus into what may likely happen. And of course we know how crucial this is to the Federal Reserve policymakers, as this is their preferred inflation gauge, which if it comes out today, well, it's going to be giving us an insight into the Federal Reserve's future policy decisions, hereby influencing short-term trading opportunities on this asset. So there's nothing much to say on the XAUUSD than to hold on to our current position. At this point, I still maintain that bullish bias. Price still remains above that temporary demand zone, as you will see here. So I will continue to hold on to the bullish bias unless we have a breakdown. And in fact, I want to see a retest of structure to feel comfortable selling this asset. And then if price continues to drop to the downside below the 2005, then we can consider adding more sell position. But as it is right now, it's still looking bullish to me. And like I said yesterday, we have multiple levels that we will be using to add more positions to our existing trade. We have the 2026, we have the 2030, we have the $2039.50 level, all of which, if price will break out, retest the structure, we will definitely be adding more positions to our existing trade. Now, there is one thing I also mentioned yesterday, which I would like to reiterate as regards to the bullish opportunity here, and we did emphasize the fact that price broke down this ascending trend line, and that from technical standpoints, whenever price breaks down a trend line like this, we do expect at some point in time price may come back to retest the trend line to incite a continued trend continuation. That is one scenario. And then we also talked about the descending trend line we identified on the higher time frame, which interestingly shares a confluence with that ascending trend line. So this area is a crucial spot, that is, if price climbs up, if price gets into this area, I did mention that we will be moving all our stop losses to secure the buy position while we exercise patience and see how the market will react to that zone to decide if we are going to be adding more buy position, that is a breakout retest of that structure, or getting ready to sell more if price action continues to find selling pressure below those areas. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. And that reminds me, I already dropped the link to the XAUUSD live window right in the comment section. It is pinned at the top of the comment section, so you want to be clicking on that link. Click on the notify me button so you can get notified as soon as we come on live. Now, the XAUUSD live window is an avenue where we all come together as a community to monitor real-time price action on the XAUUSD, especially during the New York trading session. So it officially kickstarts about 5 to 10 minutes into the New York session, and it runs through for about 5 to 7 hours, depending on the level of opportunity I am able to identify in the market during the space of time. So I look forward to seeing you guys right there, and let's monitor the XAUUSD together. So as it is right now, price still remains above that temporary demand zone. We continue to look out for buying opportunity unless this demand zone is breached and broken down to the downside. Then can we consider selling opportunities in this market. So with that being said here, I think I will be rounding off at this juncture, but I will wait and see if there are any questions whatsoever, or you need any further clarifications. If you do, please feel free to let me know in the comment section. So with that being said, I will take the next 5-10 seconds thereabout to see if there are any questions before we round off on today's Forex Morning Mastery session. Ronald Kalnin, good morning to you. Thank you for checking in. All right, so in the absence of no questions, I do want to assume that we are all on the same page, and it's on this note how we like to round off on today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really enjoyed every single moment, though this week wasn't as impressive as we thought it's going to be. Well, such happens in trading. It happens. We can have a long week of winning streaks, and all of a sudden things might not just work accordingly. But one thing we do understand is the reason behind the choppy situation in the market this week, as most of our positions did not gain traction as price action keeps coming back into the entry point, and this is as a result of the indecisive nature of the market during this particular point in time. And we all know why that has happened, because of the anticipation of these major events during the course of the week, and coupled with the fact that there is a dichotomy amongst market participants as regards to when the Fed are going to be reducing their interest rate. This, in fact, has been the major reason why the market has been caught within a trading bound across all the assets. However, we shall take succor in the fact that the USOILSPOT did very well this week, as we were able to scoop in some significant amount of profit on that one, and I do hope that was able to balance out the losses we had during the course of this week. So let's see how the market is going to play out today. Let's see if we will be able to make some profit off the chart, as I still believe that today is likely going to be bringing in some volatility, since today has the last economic feature that everyone is looking forward to. And I think with this one, market participant will be able to make a confident decision. And so all we just want to be doing is to just strategically position ourselves for the next move. And I do hope you are able to mark out this level as we did during the course of the illustration. If you have done that, well done to you. Let's exercise patience and wait for the structures to mature before jumping into any of the positions. And always remember that any decisions we make in the financial market is more or less an educated guess. And because it is, we want to ensure that we have a well-defined risk management strategy in place to protect our positions against any sudden pullback that may happen in case price moves against us. For those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So if you haven't subscribed to this channel, I encourage you to subscribe, as I will be sharing some videos during the course of the weekend as our preparation ahead of the new week. So I will be sharing some video, and you do want to be keeping tabs with those videos. So click on the like button, click on the subscribe button as well. Click on the notify me notification box so that you can get notified as soon as I drop those videos on this platform. So it's on this note, I want to wish us all the best of luck. I wish you a wonderful weekend as well. But we shall continue to communicate in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Happy weekend to you guys. Trade smart, trade consciously, and do have a wonderful evening. See you all in the XAUUSD live window, the TradingView platform, and of course during the Telegram platform as we continue to monitor price action. Bye-bye.